This episode of RealAg Radio is brought to you by Ag Expert. Go from field to farm with Canada's most trusted, most secure farm management software. Ag Expert keeps you on top of it all, no matter where you are. Get started for free at agexpert.ca.
It's time for RealAg Radio on Rural Radio Channel 147 on Sirius XM. RealAg Radio and RealAgriculture.com is your home for insight and analysis of the issues that are impacting your farm business. Let's get real and get connected with RealAg Radio. Welcome to RealAg Radio here on Rural Radio 147, Sirius XM. Shaun Haney, your host here on this Wednesday, midweek edition of the show. Thanks so much for making RealAg Radio and Rural Radio 147 a big part of your workday. It is great to have you here. Also, big shout out to everybody also listening on the RealAg Radio podcast. Well, it's the midweek edition. We've been trying to do on Wednesdays is hammer in on what's happening in the markets. And today's special treat. It's going to be a lot of fun. We've got Scott Shellady, better known as the Cow Guy from RFDTV. You also hear him here on Rural Radio 147. He's going to provide some of his perspective on what's happening in these markets. Shaky times. We're also going to hear a product spotlight with MacDonald. He's with G3 Canada. And we're also going to get a market perspective. So we're double dipping on the market perspectives today. Okay, special treat for you. It's like a baseball doubleheader on a Wednesday. It's getaway day. We're going to be talking to Christine McCracken. She is the senior analyst with Rabobank in the area of animal proteins. She's going to talk about pork today. And if you're a pork producer, you know this already. The break-evens are not looking really great. Now, is there relief in sight? What is happening? What's causing this? Is it demand? Is it too much supply? Christine's going to provide her analysis of that. And we'll also have some time at the back end of the show today for the top ag news stories of the day. If you have any feedback on today's program, we would love to hear from you. Send me an email, shaney@realagriculture.com. Or, of course, you can find us across all the different social media platforms. We're on YouTube, Twitter, Facebook, Instagram, as well as TikTok. Make sure when you're on our YouTube videos, or the channel specifically, just hit subscribe. Become a subscriber to our YouTube channel. That means you don't miss any of the great content that our team across Canada is producing. And, the other option for you is to call the RealAg feedback line. That is 855-776-6147. When we go through these market discussions today, I want you to... we all have our biases and our opinions of what's happening and more so what's going to happen next. And listen, nobody really knows. Nobody knows. If you know, you'd be very wealthy if you called the market right all the time. What I want us to do today is to listen to what our analysts have to say and go through the digesting of it and compare it to what we're thinking is happening in these markets on the grain side and on the oilseed side, as well as, of course, the proteins. And then see if we need to change some of our perspective or alter our course or, how does this impact our crop marketing going forward? So stuff to definitely be paying attention to here today. I think we're going to get a lot of value out of what our guests have to say. Let's take a break. When we come back, we'll get started first with the Cow Guy. He's up next. You're listening to RealAg Radio.
We have the financial tool you're looking for. An advance payments program, Cash Advance from CCGA, is a low-cost farm financial tool that can help cover your spring working capital needs. Borrow your first $350,000 interest-free with the rest at prime less 0.75%. Apply on over 50 commodities. Call our experienced team or visit ccga.ca. Cash advances are made under the Government of Canada's Advance Payments Program.
How's your seed quality? What should you treat with? What about herbicide carryover and environmental concerns? Spring is here, and you've got a lot of things to think about in regards to your pulse crop. The Pulse School on Real Agriculture has information and advice for all these questions and more to help you navigate this season. Brought to you by BASF. Pulse School episodes are available at pulseschool.com, realagriculture.com, or as a podcast on your favorite streaming service. Download the latest episode today.
Infuse some energy into your next corporate event, customer meeting, or conference with RealAg Radio, Canada's national agriculture radio show. Create a unique experience at your next event with host Shaun Haney, broadcasting RealAg Radio live on SiriusXM, featuring exciting guests, captivating interviews, and the latest news from the agriculture community. Contact advertising at realagriculture.com or call 587-787-1795 to book your on location with RealAg Radio today.
And welcome back to RealAg Radio. This segment's brought to you by Granubor. From U.S. Borax, ask for it by name. Make sure you go to borax.com. Let's talk some markets. I'm joined right now by Scott Shellady, better known as the Cow Guy from RFDTV. Scott, great to chat with you.
Good morning. Yeah, good to be here.
Okay, I guess right now, how would you describe this market? It just feels like there's this abundance of caution and we're just continue to kind of shuffle our way to the downside. It just feels like there's a lot of risk working against us. How would you describe what we are watching right now?
Yeah, well, I mean, you got to have to look at it like probably a 4-year view, because I think the high prices of the last few years have polluted is probably the strongest word, but I mean, it's really affected the way folks have kind of handled themselves, especially in the commodities area. Now, I have to look at fixed income and equities to get a better picture of commodities, because they all kind of three work hand in hand. You can't talk about commodities without talking about inflation and interest rates. And those two things obviously have a lot to do with what equities and interest rates are doing. So I would say this, as far as commodities go, I feel bad for the producer. We have a family farm. I get out of bed on the side of the producer every morning. I have to pre-apologize for that. I know on RFDTV, there are consumers, General Mills, Pillsbury, and the likes, that do want lower prices and genuinely want that. But I can't help it. I want the farmers to see higher prices, and we had them in January this year, but the expectations were pretty high that it was going to be another year like we've had the last 2 or 3, and obviously you can tell by my tone of voice it hasn't worked out. Especially April was pretty brutal, and the first few weeks of May have not been kind either. Combined with the fact that we have been, combating inflation. Inflation, I don't want to say it's coming down. It's just going up at a slower pace. That's been something that's worked against us. Higher interest rates worked against us. Where I think, the first thing that really, I wrote about it in probably February, but when I felt as though we were going to have an El Nino year, we have a fairly high likelihood of hitting our projected yields, our trend line yields, when we have El Nino years. And we started to get some rain in some pretty dry areas in America, and I thought in the U.S. here, and I thought, uh-oh. And then I think the funds jumped in on that, and I think that they're fat and happy, and it's going to take a little bit more than just maybe a dry 10 days in the Midwest to kind of scare them out of their shorts. And so I think it's going to be a tough road to hoe. I mean, we could get a genuine weather rally, I suppose. But, Shaun, I just think it's way too early to be pinning my hopes on that, because I can't pin my hopes on demand right now, because arguably we're overpriced.
Yeah, and if you mentioned the broader market, you look at crude oil, it's had its own issues as well. Like that's kind of an indication as far as how the economy is going as well. We're kind of, I guess, kind of stalled out here right now. It sort of feels like. Yeah,
we can't. I mean, my view on crude oil, and this is something I've said, that finally they're getting off their keisters and doing something about it. But I had not really heard from the ethanol industry about all this push to EVs. I mean, I'm like, where have you guys been? While we're working on trying to get something together with jet fuel. Okay. Yeah, let me know how that goes for you. I mean, that's been something else I think that's been weighing heavily on the grain markets, because 1/3 of our balance sheet in corn goes to ethanol.
Yeah. And
these guys have been sitting around watching the administration, or at least California's administration, push everybody towards electric tractors and the likes by 2035. Even the federal government's put some things in place for that as well on that time frame, or sooner, by the way. You've got Jennifer Granholm talking about making our military all electric by 2030, which is absolutely impossible, but still they talk about it. And I just can't believe that something that's 1/3 of our corn balance sheet, they haven't really. I don't know. I would have thought the ethanol lobby would be going to renewable fuels, would be going crazy. I know that they have woken up to it a little bit, but I just can't believe I haven't heard a lot more from them. And now we're starting to see some pushback even in the last week. So that's been good. But that's also been weighing. there hasn't been any good bullish story to run a buyer in to try to take these markets higher. And if it's not going to be demand, because we are arguably overpriced to some things, it's got to be weather. But weather it's just too early for me. And if we do get it, Shaun, I mean, I think that there's going to be a lot of selling from folks that missed it on the way down. So it's not going to be that automatic snapback. And if we do, it's only going to be there for a couple of days. You better have your orders in and resting. And I don't want to be too doom and gloomish. I'm just trying to be, as a matter of fact. And if I could get, I did a radio show this morning here, and I said, the D's $5 calls to expire, on the D's contract in corn. 580 calls. Sorry. We're trading about 520, 518 in D's corn right now. He says, they're worth 17, 18 cents. Would you be a buyer? I said, no, I'd be a seller. And he says, why? I said, because I want that to be a problem for me if I've got corn. If I can get them done for 20 cents, that puts me around $6. Come make those short calls a problem for me. Make those margin calls a problem for me, because that would be a great problem to have.
Yeah.
And so
kind of like tempting the market, like washing your vehicle.
Right. And if it doesn't work out, you brought your break even price down to 560, right? Because you sold them for 20. I mean, that's where I'm at with this, because I feel like the market's going to be heavy on the way up, because I do feel as though, I don't know. I mean, when we were farming on an everyday basis, I would have said by this time of year, we would have been 30% covered, maybe a little bit more. I don't know. I mean, and now are you going to be rolling out the boat and trying to cover yourself at 520 in D's corn? I don't think so.
Well, and I keep on coming back to the fact that in the past couple of years, you were so rewarded for putting in the bin and just holding. Like that's where the rewards were. And there was so much regret about, sold too early, right? Because the market was just on a rocket ship on the way up. It's like a SpaceX shuttle. And we're not in that environment now. We have to continue to remind ourselves 2 years ago or last year is not this year. And so the strategy needs to shift.
Yeah, we call it short-termism. Whatever happened yesterday is probably going to happen again today, and that's not right. And you can lose a lot of money that way. And so we were, at the beginning of this year, we were hanging around, $6 in corn. You could have sold all you wanted for about 2 or 3 months. But because cash in the front month was trading at $7, everybody thought that's what was going to happen. And when you have a disparity like that, when one is too low and one is too high, everybody automatically assumes the low one is going to trade up to the high one. But sometimes the high one can trade down to the low one, and you're left holding the bag. But you combine that with the fact that we've got an economy that's slowing down. You combine that with the fact that we've seen a historic rise in interest rates in the last 12, 13 months. They've gone up from 0 to 5.25% or 5%. Again, give me a reason to run out and buy this with both hands. That's why I think that the funds are comfortably short. I mean, it sounds like a Pink Floyd song, but they are. And there's nothing out there we've had some things that you would have thought would have scared the market, even in, say, wheat, and it was good for a 20 or 30 cent one day rally, and then it all erodes away.
Well, I think it's what some producers are looking at is like you look at some of the yield predictions on the wheat tour, and not good, actually terrible in some areas. But we need adversity to the corn crop, not to the wheat crop, in order to draw the broader market higher. Would you agree with that?
Yeah, yes, I would. I do. But here, I also take issue. Look, when I started at RFDTV, I told the owner, Patrick, I said, I don't want to, I was in the markets for 36 years. I don't want to teach farmers how to farm. They should know that by now. What I want to do is teach you what to do with the money you make from farming. Okay. That's what I want to do. So I'm not going to, because, we had a family farm, but my father and I both traded in the pits in Chicago. And so when guys would come around the tavern where we had our farm and try to talk to you like they're going to teach you how to farm, but they were from Chicago, we're like, forget it. You're talking to the wrong people here, right?
Yeah.
And so I think that there needs to be some education done with the general producer public, because I'm a little angry because a lot of guys want to come on my show for like How Guy Close or even on Market Day Report.
Yeah.
And they send me a ton of research. And Shaun, they want me to read it because they want me to call them up and have them on. Well, that's fine. I get that. That's how the world works. But to a research paper, all, January, February, March, April, all caught, and they were talking $8, $9 corn, $16, $17, $18 beans, because they're trying to sell their research to farmers, right? And they want to be, they want to talk to their, they want to talk the talk and get people to subscribe to their newsletters.
Yep.
And I just kept looking at this going, you better be right, because you're setting up these people for some big time pain. And so, of course, they set people up for big time pain. You can tell where I'm going with this. And then on top of that, I got really angry at that wheat tour, because what is that data worth? I mean, what are you trying to do to get farmers to hold on to what they got more and have it go down more? I mean, you need to say, here is what we see in a very stressed area of the states. But I want you to take consideration where the dollar's trading, what interest rates are doing, what larger crops in other countries are doing, because you need to know that. Because just taking the data from the wheat tour, I would say it's worth zero, because it only hurt guys. They held on to bad positions because of so what is that data worth if it's not going to be? I mean, you can't just take that data in a silo. You need to have everything else on the table, and it needs to be one of 10 things, not the thing. And every day they kept on coming out with world-ending stories, 1950s stories about how bad things are, and wheat was, every day was down another dime.
Yeah, going in the opposite direction. Yeah, and
so what is that data worth to me? Zero. I'm a trader at heart, right? Give me some data that says it's going down another dime, even though you're telling me we've got the worst crop since the 1950s. That's what I want to know.
Yeah. You brought up interest rates. What do you think the Fed does next? Do you think they continue to rise, or is this pause real?
Well, Jay Powell poured cold water over my initial reaction, which was I thought they were going to raise rates again one more time, another quarter. The market expectation got up to about a 35% expectation. I haven't checked today, but the last 2 days, for the next meeting, there's a 25% chance they raise rates again. We're at 4.9% CPI. That's what we call our inflation rate. We want to get down to a 2% level. 4.9% is still way too high. And you say, well, Shellady, it was 9.1. But here's what you have to take consideration. I traded interest rates in London for a long time. 4.9% is prices are 4.9% higher than they were this time last year. That's what that represents. Mm-hmm. Well, this time last year, prices were 8.3% higher than they were in 2021. So that's a 4.9% increase on top of an 8.3% increase.
Yeah.
So inflation is not coming down. It's just going up slower. And I think the Fed realizes that, and that's why they want to stay vigilant. Yes, when you look at the headline number and all the news outlets, they say inflation's coming down. No, it's not coming down. It's just going up slower. But when it was 9.1% and now it's 4.9, people think, okay, we're getting there. But still, even if they get to their 2% mandate, that means prices are still going up 2% a year. It's not coming down. You need to see a negative CPI number for prices to be coming down. So I think they're worried about losing face. They've already lost face, if you ask me, and this is what they're good at. They probably pause, but what they're going to do is run the risk of the Saudi oil minister that he came out yesterday talking about speculation, and you better be careful being short oil because they might want to do another production cut, and that could send oil back up to the mid 80s. And if you see oil go up, now commodities aren't that big of a part of the CPI, but energy is. And if you see energy pop up like that, another 10, 15%, that's going to bring CPI back up above 5, maybe make another run. And then you've paused. And then all of a sudden there's a big, huge kerfuffle. So they probably should raise it one more time, but they probably won't because they're the Fed.
Scott, I love chatting with you because you your life has been as a trader, right? And so you think about it from a trader's perspective, and you right away, when you have inventory, you're immediately biased on what direction you want the market to go. When you're a trader, when you're trading both sides of the equation, you're just looking for movement.
Yes.
And right now it just feels like there's some chum in the water for people that want to be on the short side.
You're exactly right. And that's why I say with these funds, don't be mad at them. Don't be mad at speculators. I mean, they serve a purpose too, right? Speculators, when they see that there's too much being made of something, they sell it, they go short, the price goes down, which makes it profitable for other people to move into the market and start, making it again. And they correct markets. These funds can, and so they've stepped in and they thought what I thought. El Nino, we're getting some rains and some stuff that doesn't normally get. Look at all that rain we got in California this year so far, right?
Yeah.
I mean, come scare me out of my short position, right? And all we've done, and because we're overpriced compared to the rest of the world, who's had some big bumper crops in wheat, we've frozen all the producers. They're not selling, they're not buying anymore. But the market's just come off, and it's been historic. I mean, I don't know what day it was. Some day this week, Chicago wheat was off 49%, over the last 12 months. I mean, that's huge. I mean, and so that's why I get angry. I'm like, okay, thanks for your wheat tour, but that's like, that actually hurt me, if I'm a producer, because that's not going to get them to sell. If anything, it gets them to buy more. And I think that you need to take everything into consideration. And once you finally do, then you understand why the funds have sold this thing.
Yeah, great points. Hey, Scott, thanks so much for joining us. I really do appreciate it. Keep up the great work at RFDTV and the cow guy close. Really
all right, brother. All right, Shaun. Thanks.
You ever go to like a neighborhood playground and you see the signs like play with caution? That's how it feels right now in the markets. Play with caution, especially when you're long inventory. When you're on the long side, which farmers are naturally, is a bit of a different time. So, would love to hear your perspectives on how you're approaching this market right now. Send me an email, shaney@realagriculture.com. And make sure you check out Scott Shellady on Rural Radio 147 as well as RFDTV. He's on the Market Day Report in the morning, also the Cow Guy Close in the afternoons. And I believe he also does Commodity Wrap on Rural Radio sometimes as well. So encourage you to give them great perspectives from the traders, from the traders' lens, which I think is very valuable in trying to sort out the movement of this market. Let's take a break. When we come back on RealAg Radio, we're going to hear a product spotlight from G3 coming up next.
Did you know that Pioneer now has a full lineup of Enlist E3 soybeans? Take a look at Pioneer brand Enlist E3 soybeans for the highest yield potential and for the best agronomic package and herbicide trait options. From the lab to the field, Pioneer brand Enlist E3 soybeans are the best in beans, period. Ask your local Pioneer representative about Enlist E3 beans.
As you head out into the field this season, the Corn School's got you covered. Everything from tillage discussions, weed control info, field trial results, yield strategies, and more. The Corn School on RealAgriculture.com has the information and advice you need to help you succeed. Brought to you by Pride Seeds and BASF. Corn School episodes are available at cornschool.com, from RealAgriculture.com, or as a podcast from your favorite streaming service. Download the latest episode today.
Want to get the best out of your soybean crops? Whether you've been growing them for a generation or are just starting into soybeans, find what you need to know at soybeanschool.com. You'll see videos on growing tips, pest control, and much more from specialists across the region, all in one place. Easy for you to access from your desktop, tablet, or mobile phone. Maximize your yields by staying up to date with the Soybean School, presented by BASF, Pride Seeds, and Syngenta Canada.
And welcome back to RealAg Radio. It's now time for a product spotlight with G3 Canada. And we're talking right now to Don MacDonald. He's their Vice President of Operations. Don, great to chat with you.
Yeah, good morning. Glad to spend some time with you today too, Shaun.
Absolutely. Okay, so lots happening right now in the grain business. Now, G3's vision and objective is building a smarter path from farmers' fields to the global market. What exactly does that mean for farmers who are currently doing or looking to do business with G3?
It's a different experience that farmers will get at G3 than at other grain companies. We had the opportunity when we started this company to start with a complete clean slate and say, what can we do different starting from scratch that we'd experienced with other grain companies that we could change and make G3 a better company for a better experience. So, personal contacts still very important for us. Our online tools are important for us. We have direct payments on EFT to farmers. Those are all very important things from technology standpoints and customer service. But probably the biggest thing is our ability to service farmers fast. So we built all our elevators with high efficiency unload abilities so that when farmers come to unload their trucks, they're in the driveway for no more than 5 minutes there. So, trucking time is money, whether it's a custom trucker or your own trucker, and the ability for us to move trucks through our facility and move them out and, get them back on the back, picking up more grain is important to the farmer. And as a result, we get a lot of people coming to us and say, we like the efficiency of your unload and your customer service.
Yeah. Logistics and productivity, efficiency, all very much a part of the success when it comes to, being a grain company, things that I'm sure you're focusing on. So you also have this growing network of new grain handling facilities. Talk about that and how that fits into what you call your smarter path vision.
Yeah. So when G3 Canada first started, we had already built 4 brand new, what we call loop-to-loop elevators. We had 3 existing old ladder track styles that we had acquired in earlier days. And since then, we've built another 12 of these loop track elevators. So this new model that we have allows what we call the loop-to-loop model, allows grain to move faster from country to the port. And what enables that is not just the loops that we have in the country, but the loop that we have at our terminal Vancouver as well, too. So what that does for us as a grain company to help us move grain faster is a locomotive comes on the site with the train. The crew gets off, our guys get on, train never stops moving. We load the train 8 to 10 hours later. CN or CP's crew gets back on the train, goes to Vancouver, and the same thing happens in Vancouver. So it's an efficient model that results in us being able to move more grain per facility than would traditionally be done. That was enabled because you have to be able to buy the land in the country to be able to create the loops, and you have to be able to have enough land in Vancouver, which is very tough to acquire, which we're able to build the terminal in Vancouver that accommodates it. So that loop-to-loop model is really the efficiency of G3 that helps move more farmers' grain faster.
Yeah, Don, when I chat with you here, I what kind of comes to mind as you talk about, starting fresh as a company when G3 was formed and some of the things that you're doing from a logistical standpoint. Do you feel like you're kind of changing the game in the competitive landscape here in the Canadian sector?
Yeah, I would say we have. This would be a very tough model to be duplicated, just the way the railway tracks are set out across Western Canada, the way elevators are currently orientated. There's a few other elevators like this, but to be able to do this in Vancouver, to find enough land to build a terminal that could accommodate a loop type model would be very, very difficult. So this has changed the landscape. We move grain faster than our competitors. Our turns in our elevator are quite a bit more. We're now the 3rd largest grain handler in Western Canada. We've come from essentially 0 to the 3rd largest in 7 years. So it has definitely changed the landscape. The railways obviously like servicing our facilities because they get more efficiency out of their assets. And as a result, we see good rail service on a pretty continual basis, which at the end of the day creates space and movement for farmers.
Hey, Don, thanks so much for joining us here for this product spotlight with G3 Canada.
Thank you very much, Shaun. I appreciate being on your show, and have a good morning.
Great stuff. Okay, when we come back on RealAg Radio, we're going to talk to Christine McCracken. She is the Senior Market Analyst for Animal Proteins with Rabobank, and talk about some of the challenges right now in the U.S. and Canadian pork sector. You're listening to RealAg Radio, Rural Radio 147, Sirius XM.
If you're involved in the agriculture industry, it's important to stay informed on all the latest issues affecting your business. At RealAgriculture.com, we offer fast, reliable news, information, and insights to help you keep on top of all of the latest in Canadian agriculture. Visit RealAgriculture.com and sign up for our free daily newsletter covering everything from news, agronomy, animal agriculture, and much more. Visit RealAgriculture.com/subscribe today.
Whether you're seeding, harvesting, or anything in between, the Wheat School on RealAgriculture.com has you covered. Timely agronomic information from industry experts available online anytime. Give your wheat crop a good start and a great finish with the Wheat School on RealAgriculture.com. Brought to you by C&M Seeds, Syngenta Canada, and the Alberta Wheat and Barley Commission.
The 110th AGM and convention of the Saskatchewan Stock Growers Association is happening June 4th through the 6th in Moose Jaw, Saskatchewan. Registration is now open. Visit skstockgrowers.com for more information and to register. I've been to the Saskatchewan Stock Growers AGM several times. It is a great meeting. It is educational, a lot of fun. Great to see producers from across the province there. So there is a lot happening in the beef industry right now. Now, speaking of protein, let's talk not beef today. We'll talk beef on Friday with Ann Wasco, the Gateway Livestock Exchange. Today we're going to talk pork. And we're joined right now by Christine McCracken. She is the Senior Analyst for Animal Proteins with Rabobank. Christine, great to have you on the program.
Yeah, great to be on. Thanks.
Let's start off with consumption of pork. When you put out a pork quarterly report here for Q2 of 2023 from Rabobank, and there's a lot happening in the pork market right now, and also there's some global economic factors really, having an impact at the same time. Let's start off with consumption. What are we seeing here in terms of the trends of consumption of pork in 2023?
Yeah, well, it's been disappointing all year, I think, relative to expectations. I think it's important to look maybe back at the last 2 years and just how outstanding pork consumption and demand have been. The reality is that we're kind of going back to more of a normal level, and supply is maybe a little ahead of that demand. So on one hand, we have a lot of pork supplies, and on the other side, I think consumers, and we see this across the entire spectrum of agriculture. We're just going through a tougher period, right? As everyone adjusts to this post-COVID environment and across the board inflation. So I think it is really a transition period for the industry, and we're a little long on product, and that'll take some time to clean up.
Yeah, so let's talk about the economic impacts here. So obviously there is a desire for protein in the diet. So as the economy potentially goes through a struggle here in the go forward, do people what is your modeling saying? Do people switch to pork away from potentially beef, or what happens here?
Yeah, I mean, I think the data it doesn't always support that thesis. I think that beef consumers a lot of times will stick with beef. They may eat less, but they traditionally, aren't switching a lot, moving from, say, beef to a pork chop every day. What we do see, though, is that there's a lot of different consumers, right? I think it's hard to generalize and say consumer X is going to change from beef to pork. What we do see is movement along the edges. So people either do buy smaller portions of the same product, or they just switch out and look for fillers, right? So maybe you're eating a little bit more pasta just to be able to afford that really great pork chop or ribs. So I think that you see more of that. I think what we saw through the pandemic is that people figured out what they like, and they generally aren't maybe willing to move away from it, but they want it at a good price. So there is some switching between proteins or between different cuts of meat, but we generally don't see a lot of movement maybe between proteins like you might think in a traditional sense.
Is there any difference in some of the consumption numbers when you look at Canada versus the US, or are they running pretty much in parallel?
They're really similar. There's a little bit during the pandemic, there was a wider disparity, but I think now you're seeing more of a traditional kind of consumption pattern. I think that as we head into the summer months, obviously the meat demand does improve, but generally, we're seeing the same inflationary pressures impacting Canadians that we see here in the States. And I think that really does reflect, again, all of these economic pressures that are facing the majority of consumers.
Okay, let's talk about trade and exports. We've kind of covered some of the domestic consumption numbers and what's happening, but obviously also one of the relief valves when we look at supply and being long on supply is trying to move it into the export side of the equation. What are we seeing in terms of exports?
Well, I mean, I think the exports have been pretty good, a lot better maybe for the States than Canada, but generally across the board, stronger than we'd expected. And it does reflect some of the lower prices for pork that we've seen. Certainly, that's been a big factor. Another big driver of that, though, is that some other large production regions, say Asia, specifically China and Europe, have seen pretty big declines in pork production. So that leaves an opportunity, I think, for North American producers to fill that gap. So we've seen really strong export demand here through the first part of the year. Now that could slow, right? Because, it's not just North America that's seeing those economic pressures, but globally, we're seeing some pretty big inflation, and that's likely to put pressure on consumers worldwide. But the good news is that U.S. pork, Canadian pork still prices in really well to a lot of key markets, and especially into Mexico, where we've seen really strong demand.
Why is the U.S. performing better than Canada in the export market? What's the difference there?
It is really all about currency right now. It's the Canadian pork industry specifically is going through a bit of a transition right now. It really depends on where that product might be coming from. But in general, I think that the two markets generally target very different export destinations. So I think whereas high value markets like Japan and Korea are probably equally weighted, the U.S. maybe gets a better shot at some other markets that maybe Canada doesn't always play in.
So is China the difference maker there? Is that the market you're talking about, or?
Well, the U.S. really hasn't been shipping a lot of product to China on the whole. They have been continue to ship some variety meats or lower value cuts to China, but it hasn't been a big market. Canada's been doing a little better there than the U.S. to start the year. But I think that when I think about some of the Latin American markets, Canada does have a big advantage when we think about CPTPP and some of the trade agreements that have been aggressively kind of put in place by Canada that are going to open some opportunities longer term. The U.S. really isn't going to be able to play on the same that level playing field when we think about exports maybe going forward. It really is kind of a case-by-case basis when we think about some of those smaller markets.
What about the profitability of the producer right now? How is that? How does that look?
That's a lack of profitability right now. Unfortunately, costs are still pretty high. We have seen a little feed cost improvement, but generally, it's a historically high cost of production, and prices, just as we've mentioned, are under a lot of pressure. So across the board losses, there's obviously some tools to help mitigate that risk when we think about hedging, but that would have had to have been done some time ago. For straight cash returns, you're looking at losses on that on average closer to $40-50 a head. So some pretty massive losses, and that's why I think you're going to see some pretty aggressive moves to curb production here as we move through the summer and into the second half.
This is something that's one of the differences between the pork business and the beef business. There seems to be it's easier to adjust. When you talk about curbing the supply, it happens a little bit quicker, correct?
Well, it's not as quick as chicken, but
right. Okay, well, that's fair.
It does take quite a bit of time, almost a year, to get things back in line. I would say that there's not a lot you can do. When you've got the animal in your barn, but there's clearly some hard conversations, especially by high cost operators or some operations that have been consistently being faced with some health challenges. I think those are some tough conversations for those operators when we think about losses of this magnitude.
You mentioned feed costs. Now we've been seeing the market, corn and feed barley on the decline. So I guess what's your forecast there? And relatively speaking, though, there's still pretty tight ending stocks. So what's the expectation on the go forward here in 2023 on feed?
Well, it's early, right, in the season. So I think that there are some things to be happy about if you're a producer, right? At least a livestock producer, which is to say that, we did get a big South American crop. We've started the year, and the planting season is off to a good start. Some things that give us a little comfort, I think, on a relative basis, but a lot can happen between now and harvest. So I think that, we'll more than likely get a few weather scares as we head into these summer months. And I think that it's really tough when you're losing this much money, I think, for guys to get super aggressive, right? And I think that is a challenge. But, for guys that we are looking at some lower feed costs, it sure does. It doesn't hurt. I think that if anything, there is some room for some pretty big scares as we head through the season, and that's something to keep in mind.
So what switches for the producer standpoint? What switches the profitability equation? Like, is it? Go ahead. Sorry, go ahead.
Yeah, I just don't see a lot of change in the demand side, right? I think that if you ask the average consumer, probably not a lot's going to change there. So it has to be supply. I think if you think through, where we are today, going into the summer, we'll have a little lighter weights, some lower production. But the reality is the consumer is not there. And we need to right size production. Not that I would ever tell anyone what to do, but we're clearly out of balance today. So I think the risk is that that either exports slow, right? If global consumption starts to slow more dramatically, I don't see much of a change in domestic consumption. But what could change is obviously that cost picture. If feed costs do become more volatile, that could present some challenges. And then we've got this added kind of new complication, which is Proposition 12, which is really going to add a lot of, it's going to create a lot of disruption in our domestic markets as we think through all of the implications of that.
Significant costs. I've heard
costs. Yeah, big costs. But I think when you think about, how little compliant product we have today, and this is going to start being enforced here in just a month. The reality is that we're going to have a lot of excess pork on the market that won't be eligible for export or for shipment into California and then into the Northeast with Question 3 in Massachusetts. So it does create this displacement effect that really just amplifies, how poor these markets are. We're going to have a lot of extra pork on the rest of the market, and that'll have to find a home. It'll either move into either domestic markets or into export. And that will add another wrinkle for producers.
Well, and the cost difference, price differences on the shelf, we could see a lot of people flooding into neighboring states to try buy some pork and go back home to California. So fundamentally, is the cattle business, the beef business in better shape right now than the pork business in the go forward?
Depends on where you are. Okay. I think I do primarily focus on the pork and poultry markets, but I can tell you that I have a lot of unhappy cattlemen that don't have grass, and then I have a lot of very happy guys if they do. So it really depends on where you are and what your situation is. But some really, really strong cattle markets, obviously, for those of you that have cattle.
Yeah. Okay, so you mentioned poultry, and of course in Canada we have supply management, so that's a bit of a different monster, so to speak. From a U.S. perspective, what's the health of the poultry industry right now while we're here?
Yeah, it's similarly challenged. High cost, very similar to the pork industry, and really an oversupply situation that continues to plague the market. You have excess production. They really haven't been able to right size production to that weaker consumer, and that is continuing to put a lot of pressure on those markets. Now, like pork, you'll see a little better market for chicken over the summer, and the industry is taking steps to reduce production, but it's not a quick fix. It does take some months to do. So it'll be in better shape by the end of the summer, but a really tough situation for them as well. Loss is not quite as steep though on a chicken when you think about the ramifications for that industry.
Christine, thanks a lot for joining us here today. Really, really appreciate it. Look forward to our next chat.
Great to be with you.
I'm sorry, everybody. We heard from the cow guy earlier. He sounded very bearish. We just talked about the pork business. That didn't sound good. I'm sorry to be the bearer of bad news here today. I really feel like I'm not helping people. Anyway, we got to get the truth. We got to get the understanding about what's happening and how people are reading this. I think it's really, really important. We can't stick our head in the sand at all. When we come back on RealAg Radio, we'll get to the top ag news stories of the day right after this. I get to spend every day talking to farmers in the ag industry through RealAgriculture.com and RealAg Radio. But nothing is more fun than speaking to an audience live and in person. If you're planning an ag event, book a Real Agriculture speaker to make it a successful and memorable experience. Email shaney@realagriculture.com and you can book myself or any other Real Ag personality to speak at your event. Bring your audience all the fun, insight, and energy of Real Agriculture.
Canola is more than just a pretty face in the prairie landscape. It's a big business, both here and around the world, that requires you to be informed and up to date on everything it takes to grow a successful crop. The Canola School on RealAgriculture.com has an expert library of video resources covering markets, agronomy, and more to help you grow a healthy and profitable canola crop. Visit canolaschool.com today. Brought to you by BASF Canada and Invigor Hybrid Canola.
And now it's time for the top ag news stories of the day. Are you looking to simplify your sulfur solution on your farm? Many of you are. Get BioSol Premium Plus from GFL Ag, the unique combination of compost and elemental sulfur that provides a cost-efficient, logistically friendly, agronomically sound, long-term and environmentally friendly sulfur solution for your farm. Learn more at gflagra.com. That's gflagri.com. First up, Prime Minister Justin Trudeau said he will not call an independent public inquiry into Chinese interference in Canadian politics after former Governor General David Johnston recommended against one. Mr. Johnston, who was asked by Mr. Trudeau in March to lead an investigation into foreign meddling in the 2019-21 elections, said in his report tabled on Tuesday that such interference is an increasing threat to our democratic system, and China is particularly active. He concluded, however, that because intelligence about Beijing's activities is highly classified, it could never be openly discussed with Canadians in a public inquiry. So there's a lot of reaction. So that story's from the Globe and Mail. There's a lot of reaction to this, and here's what I would say as I read everybody's their particular perspectives. Is basically Mr. Johnston is saying, "Trust me," and also disappointment in the opposition for how they created this narrative that Mr. Johnston is somehow in cahoots. I think Pierre Poilievre, the Conservative leader, said numerous times at his press conference that it was essentially the Prime Minister's ski buddy that did this. So this is, whenever the next election is, this, I think, is going to be something that's talked about. Now, does it drive votes? Not particularly sure. I think this kind of fits very much into Canada's caution about doing anything to really offend China. Although we did send the Chinese diplomat home, we did do that in regards to some of the meddling. But when it comes to I'm not sure what the right answer is, but there was not a real positive response yesterday from many people on the report that was put out by Mr. Johnston. Chip Flory, host of Agri Talk, was joined by Aaron Borrower, economist with the U.S. Meat Export Federation. And she talked, remember last week we talked to the Canadian Pork Council about some of their concerns with Proposition 12 in regards to how Canadian exports would be handled going into California. Well, she shares some of that caution, and she also has many questions that are very similar. And one thing she talked about, she was quoted as saying, it's strange to be auditing in California, but auditing foreign farms, particularly in Canada, and how it actually operates, it's something we've never had before. Her words. She also said it not only alters the landscape of domestic animal agriculture, but also upends the norms of international trade in meat products, forcing us to confront a slew of new, complex questions. Fascinating. We're following Prop 12 as close as we possibly can, and what some of the impacts are for the Canadian pork sector. I know that CCA, from a cattle perspective, is also following this close to see how it potentially impacts them as well. Canada has the highest level of household debt in the G7. Not a standings that you want to be on top of, making its economy vulnerable to a global economic crisis, according to the country's housing agency. In a report that was published on Tuesday by Canada Mortgage and Housing Corp, they basically said that mortgages currently make up about 3/4 of household debt in Canada, while household debt made up 80% of the size of the overall Canadian economy during the 2008 recession. It rose to 95% in 2010 and exceeded its size in 2021. Now, by contrast, household debt in the U.S. fell from 100% of GDP in 2008 to about 75% in 2021. So there's some comparisons between Canada and the U.S. The price of copper is showing signs of sudden weakening in global demand, with the largest discount against its future equivalent in nearly 2 decades. Now, the price of copper is many times used as a bit of an economic indicator in terms of the push for building. Because you need copper, the wire, right? And we've had situations where copper prices have got out of control. Like, think about during the beginning of the pandemic and how people had to lock down their copper. There was so much theft that was going on. The spot price for copper, a metal often used as I said, a gauge for the health of the global market, has seen a rapid decrease as stockpiles outside China increase in the London Metal Exchange warehouses. This is amid a slowdown in U.S. and European industrial activity after a year of quick interest rate rises. Talk of further Federal Reserve tightening is back. Fed hawks are in full voice, and senior bankers such as JP Morgan boss Jamie Dimon this week mulled risks that rates could get above 6% before peaking, a level some had feared they might reach before the banking stress hit in March. So we talked to Scott Shellady about this a little bit earlier. What does the Fed do next? There's a bit of a game of ping pong happening here from week to week, from hawkish to maybe we do need to raise rates to, hey, maybe we do need to pause. Now, one thing that's happening a lot in the U.S. right now is this whole discussion about the debt ceiling. Yeah. So GOP negotiators have insisted that any deal with Democrats must result in lower discretionary spending next year than this year, calling it a critical step in starting to address the country's growing debt, which now stands at $31.4 trillion. Democrats say the GOP demand to cut spending is unreasonable, particularly after the White House has signaled that it could agree to freeze discretionary spending next year and potentially cap future increases for 2 years. The fight over spending is seen as the main holdup in talks to raise the debt ceiling. The Treasury Department has warned that the federal government could run out of money to pay all of its bills as soon as June 1st. That's coming fast unless Congress acts, potentially leading to a default that would rattle markets and sink the economy. So you say, what would happen if the U.S. defaulted? Well, volatility might also send shockwaves through the financial system, spreading to the derivative and mortgage markets, where treasuries are often used as collateral for securing trades and loans. The focus would then turn to the Federal Reserve and its backstop menu of options to avert a calamity. But Chair Jay Powell has repeatedly warned that no one should assume that the Fed can protect the economy. So Moody's Analytics forecasts spiking interest rates and plunging equity prices, as well as the freezing up of short-term funding. That sounds horrible. I don't know about you, but it's not good. So something that we're all following very closely. If you have any feedback on today's show, send me an email, shaney@realagriculture.com. Thanks, everybody, for getting real and getting connected with RealAg Radio. And we'll, of course, chat again tomorrow. Cheers, everybody.
Thank you for downloading this episode of RealAg Radio, brought to you by Ag Expert. Go from field to farm with Canada's most trusted, most secure farm management software. Ag Expert keeps you on top of it all, no matter where you are. Get started for free at agexpert.ca.